Good morning. I'm Scott Humphrey, the CEO of the World Floor Covering Association. We appreciate you joining us today for first of what I believe will be many webinars on the topic of the coronavirus and our response to that virus. When I say our response, I mean the WFCA's, but certainly yours as professional business people. How do you respond? How do you take advantage of the legislation that's been passed on your behalf in Washington, D.C. and some at the state level? Let me explain to you how the webinar will work. Our focus today is for this to last about 1 hour. We have a little bit of leeway on that, but our goal would be to answer what we have seen to be the most frequently asked questions. Jeff King, myself, Steve Abernathy, others on the WFCA team have received a plethora of questions about specific areas of the legislation, and our job today will be to focus on those areas. But if you have additional questions, down at the bottom of your screen, there's a Q&A little icon that you can click on, and you can post a question for us. If we have time, we will get to it. If we don't have time to get to that, then what we'll do is try to answer that, and you'll find it in the FAQ section of our website, www.wfca.org. Let me take just a moment to update you on what the WFCA has been doing, and then we're going to get right into the meat of this. So over the last 2 weeks, we've had over 20 communications go out with basically interpretations of the dialogue and what's been going on in D.C. We have a phenomenal partner in Washington, D.C., our lobbying firm, Lobbyit, and they have great connections. And oftentimes we're getting a look at legislation before it's finalized, when they're still going back and forth and determining what they want to do. We've been given a voice in that. Jeff is often responding and sharing your insights, your thoughts. We've reached out to many of you one-on-one to give us ideas of what they need to include in further legislation, and some of that has actually been adopted and been put in that. We made our membership free for the WFCA for all primary members starting January 1. The timing was primarily to focus on the installation crisis, but right now it makes more sense than ever for us all to speak with one voice, because the more of us there are, the more they hear us. And they hear you differently, obviously, because that's constituents, that's people that vote. We have been sending out our communications to, first of all, our board, then to our entire membership, and then, quite frankly, to the entire industry, to other associations who we've been working closely with. I meet weekly with a group of major associations, and we share best practices and share knowledge, and we share our resources. And we don't care who gets credit for that. Certainly they have the ability, as any of you do with communications we send out, to change those communications and make them come from you and address them directly to your audience. One of the key things that we've done is update our website. As I mentioned, www.wfca.org. You want to go there often. We have a Coronavirus Response Resource Center. It's the very first thing you see when you go on that page. And in there, you will find a whole lot of good information. In fact, many of the questions you're sending to us, you'll find are already answered there. Here's some of the things that you'll find in that coronavirus response section. Information on future webinars that you can attend, updates on each legislation as it is passed, an FAQ page. Again, that's probably one of the highlights, where Jeff has responded to individuals. We've taken that information and taken all identifying information out of it and simply allowed Jeff to respond to that question and post that for you. As of last night, we have a Canadian response page for our friends north of the border, because they have their own challenges, and we want to make sure they have resources to tap into. We have state-by-state resource links, because some of the questions you ask us are specific to states, and typically that's an area we don't delve into. But we do try to give guidance there where we can. There's an explanation of shelter-in-place orders, which is one of the key questions that you've been asking. Information on business interruption insurance, and information on small business emergency loans, as well as much other information there. One last thing is, we have made the online university, WFCA University, free for all of our members through the end of April. So please take advantage of that, utilize it, take advantage of this forced downtime so that you can accomplish something positive in the midst of that. Let me take a moment to introduce to you Steve Abernathy. He is the CFO of the WFCA, a role that he has filled for the last 5 years. Steve spent over 30 years at Shaw Industries, where I spent about 25 years myself. We had worked together. Great respect for him. Steve has a grasp of the financial markets like few people I have seen. And I asked him to come on and just help you better understand how what we're going through compares to other cycles that we've seen. I think we're all afraid during this time, but one of the best things you can do to remove fear is replace it with knowledge and information. And so I wanted Steve to come in and speak to you about that. So Steve, if you'll take a moment and share with them your insights on the markets.
Very good. Thank you, Scott. And good morning, everyone. I hope you're having a wonderful morning. As Scott said, I want to take just a brief look at the macroeconomic climate that's going on in our country and really globally at this point in time. It's no secret to everyone our financial markets are in somewhat of an upheaval at the present time. But I want to show you a perspective of this that looks back at history, because we've combed through things like this before, and we've got history as a guide to kind of learn what to expect as we go forward. I'm going to share with you some charts, just a few charts this morning to kind of illustrate what's beginning to happen and what we're going through, and then how that compares, as Scott said, to some of the historical cycles and bear markets that we've entered. As you all know, the general economy is typically reflected in the stock market, financial markets, particularly in equities and the stock portfolios of most Americans. The slide that I'm showing you today is really looking at what has happened over time as you look at stock market drops throughout history, going all the way back to 1929 and the Great Depression. The orange graph line on this chart represents what's happened since really this started in 2020. This is the coronavirus downturn, if you'll call it that. And you'll note that this is, without a doubt, the fastest drop we've ever experienced. We have had this level of drop before, but it's never occurred this fast. It really moved blindingly fast, and I think it caught a lot of folks off guard. Of course, we've seen that impact of that in the business climate. We've seen, 3.3 million layoffs last week as the numbers came out. We're already starting to see some impact in the flooring industry. I know that Shaw had a couple of weeks off with many of their plants in Bartow County here in Georgia. I believe those have since been restarted. Floors will be shutting down for. So we've got some impact already beginning to show up, even in the flooring segment in the flooring industry, and I'm sure that's not over at this point in time. So the swiftness of the decline has really what's got everyone worried about it. But I do want to show you that all of this eventually corrects itself. And so we're going to look at some more charts to illustrate that. This second chart is a measure of market volatility. It's a weekly rolling volatility measure. And you can see all the way back to the Great Depression, we actually exceeded market volatility that we're experiencing right now, both in the Great Depression and also on Black Monday in 1987, when the market dropped essentially 20+%, almost 22% in one day. That volatility was higher than what we're actually, believe it or not, experiencing right now in 2020. And then the financial crisis of 2008, we were just under the volatility levels that we are today. What this really tells you is the market is gyrating. It's going down, it's coming up. And folks are really searching for, where the equilibrium is at the current state that we're in. So we've seen these levels before. This is not the first time this has occurred. And so this is not really uncharted waters, other than the fact that it came down so swiftly and so fast. And it's hitting globally, not just here in the United States as well. The other side of the equation, apart from equities, is really the bond markets. And when you look at the most common measure of bond market activity is the 10-year Treasury note. This is a graph of the 10-year Treasury note. It is at historic lows. It printed a low on March the 9th of 0.54%. That is a historic low by all measures in the 10-year Treasury. What this indicates is the level of fear that is out there. Folks are trying to get to something they feel like they won't lose their money on. So they're pulling their monies out of the stock market. They're pulling it out of corporate bonds. Corporate bond yields have gone up. The spreads between the corporate bond yields and the treasuries have just widened substantially. And people are flocking to the safety of the U.S. Treasury market, and it's driving yields down. Now, as the Fed begins to borrow more money, that could reverse itself to some degree. You could start to see interest rates climb just simply because of the borrowing that's going on because of all the physical stimulus that Congress is putting in place. The monetary stimulus and physical stimulus is also unprecedented. We've had injections now somewhere on the order of when you look at the leverage of it, about $6 trillion worth of activity being pumped into the financial markets to provide liquidity, both to banking, but also to businesses. And Jeff's going to talk about some of those things that the government is doing that you can take advantage of, but know that there is a lot of liquidity being pumped in to stabilize the markets and hopefully help stem the decline, lessen the fear that people have, because fear feeds on itself. And it's just a cycle that's hard to break if you can't stabilize it. And that's what the Fed's trying to do at this point. If you go back through again, looking at the history of the stock market, you can see very quickly that's about all of the things that have come about in the years that the market has been here. We've lived through a lot of different things. You can see on the far left chart here, the Black Money crash, the 90-91 recession, Los Angeles riots, the World Trade Center bombings, all of those things, we have grown out of those declines and went on to new highs. Same thing with the Asian financial crisis, the Y2K, the tech bubble, and then Lehman Brothers and the whole 2008 financial crisis. That whole thing was very, very swift, and it was very, very troubling at the time we went through it, but we recovered out of every one of those and went on to higher highs. Same thing on the Ebola epidemic that we had not many years ago, the Zika virus, Brexit. All of those things caused momentary declines in the stock market. They're very troubling, but from a longer term perspective, we generally recover out of those in a few months or at the most a few years. Hopefully it won't be a few years. This last chart I want to show you is really illustrative of what happens after downturns. Generally speaking, the downturns, which are in red on this chart, are not as deep and not as long-lived as the recoveries that follow them. So going back here to the 1950s, you'll notice we had a bull market in the 1950s that grew the market almost 200% during that time frame from 1950 to about 1955. We declined 21% in a bear market thereafter that lasted only a few months. And then we went back up 86%, and you can see the gyrations through the years coming across there. And then when you get into 2000, for example, this is the bull market leading up to the dot-com burst in 2000. We had a 528% bull market run from about 1987, 88, after the 87 crash. We come out of that all the way up to about 2000. We had a long run that moved us up 5x. We followed that with a 49% decline. Now, we're not at 49% decline at this point in time. But that one was 49% and lasted again several months. And then we came up 100% leading up to the 2008 financial crisis with Shearson Lehman and all of that, followed by a 57% bear market, then followed by the current bull market that had lasted for 11 years, leading us up to about a 4x gain in the financial markets. And we're just into now a new bear market, technically, and by definition, we're down 30%. So far. So I show you this chart to say this: in every case in history, no matter how bad it was, at the end of the bear market, there's a bull that follows it. And so there's no real reason to despair or to panic. It's to be prepared and to make the changes that are necessary to see you through it. What can you do? Well, first and foremost, don't panic. If you panic and you don't make sound financial decisions, you'll make mistakes that you regret down the road. So, don't panic. Really think about the decisions you make. You will have to make some decisions. Some of you engage your team. If you're looking at cost-cutting measures and things of that nature, which I'm sure you are and you need to be doing, engage your team. They may have ideas how to save money, how to cut costs through this difficult time to help you weather the storm. So engage them in that activity. Don't leave them in the dark. You may find that they can really help you in identifying those things that would benefit your business. And finally, pursue business where you can get it and where it's legally authorized to perform. I know there are a lot of restrictions on work today, but where you can legally perform, there may be opportunities, such as in hospitality. We were talking about that earlier today, where in the hospitality segment, there may be opportunities, since no one is staying in hotels, that you can use that time to do renovations, and those hotels and motels would choose this time because they don't have any occupancy to do some of those projects, go after those projects, pursue those projects. And then again, finally, Jeff's going to talk to you about some of the opportunities that the government has for assistance, both for your employees and the small businesses that you run to get financial assistance from the federal government. Scott, that's about all I had this morning. I'll let you take it from there.
Thank you, Steve. So guys, you can tell just as we are that you're working from home, we're working from home. Signals are different. Steve has not been drinking, even though occasionally it would drag while he was talking. I just want you to know that he drinks nothing more than an Arnold Palmer occasionally. So you're safe with him. Steve, good advice. I think the thing I wanted people to see more than anything is that we've had down cycles before. Though the causes are always different, we've always come back, and we will come back from this one. We just have to be prepared and make great utilization of the time we have right now to make preparation for what is to come. The star of the show today will be Jeff King. Jeff's been amazingly busy over the last 2 weeks responding to your questions and requests for information at levels he's probably never done before. Jeff has been with the WFCA and serving as our legal counsel since 1997 and has been through many ups and downs with us in the financial market. But as I said, his expertise, having practiced in DC, helps us greatly. He has a lot of connections up there and a wonderful partnership with our lobbying firm, Lobby It, where Jeff and I spend time usually 2 to 3 times a year up there doing lobbying on behalf of the flooring industry and especially professional flooring dealers. So Jeff, before you get started, let me just simply say to everybody that, guys, Jeff is not licensed to practice law in every state or in Canada, but he does have this uncanny knack for taking information and deciphering it out of DC into a language that we in the flooring industry can understand. And so we offer this advice as an overview and to generate conversation for you between you and your professional guidance team, whether that be legal or accounting experts. But in no way do we tell you to simply act on what you hear here. We simply want to make sure that the best information that's available out there is available to you. So Jeff, with that in mind, I'm going to turn it over to you and ask you first to kind of give an overview of what's going on with the different legislations that have happened in DC. And I know you have a few slides to share with us as well.
Good morning. Good morning, everyone. I trust you're all safe and healthy, so and please stay that way. We're going to do a very short and quick PowerPoint presentation just to lay out basically all these new laws and orders that are coming into place. So if we can pull up the PowerPoint. Go to the next slide if you would, Louis, I appreciate it. As many of you know, I'm going to talk about basically the 2 federal laws and then some shelter-in-place aspects to it. But there have been three major stimulus packages. First one dealing mostly with healthcare and funding for facilities as well as research. The second one was called the Family First Coronavirus Response Act. I'll probably refer to as the first Families First Act. And it basically was to help employees who were laid off because of COVID-19, the coronavirus. The second one, which we call the CARES Act, was designed, at least in part, to help small businesses through this economically troubling times. And then, of course, you have a multitude of states, cities, counties issuing shelter-in-place orders that can affect whether you're allowed to continue operating, and that determines whether you're an essential business and fall within one of those exceptions. Next slide, Liz. So the Family First Coronavirus Act has 2 parts to it. The first is you get 2 weeks of sick pay paid by small businesses. That means anybody under 500 employees. Anybody over that is covered by the laws regarding family leave and such, to which they don't have to pay for this. So a little bit unfair where the burden's put. But you have to apply for 2 weeks paid leave, but only and only if you fit into one of these categories. If you're under a quarantine order and your workers can't come to work because of that quarantine order, then you pay them up 100% of their salary for the 2 weeks. A total of 80 hours is how it's calculated, up to $500 a day, $11 a day. And if you have a part-time employee, then you pay him 100% of what that normally is based upon the prior average. If they're under a doctor's orders not to come to work, then again, you have 100% up to $511 a day. Or if they themselves are showing signs of coronavirus, you get 100% up to $511 a day. If you're caring for someone who is under one of the top three, the quarantine, the doctor's orders, or sick, then you get 2/3 of your salary, up to $200 a day. And I do know that doesn't mathematically make sense, but it is what the law says. 2/3 of $511 is not $200, but that's how it's written. Or if you're caring for your own children, the law actually says sons and daughters, because of a school closure or no daycare as a result of the coronavirus, then you get 2/3 of your pay. Next, Louis. The second one is you get 12 weeks of paid family leave, okay? You've all heard 10 weeks, let me explain that. You get this leave if you're caring for one of your children because school is closed or daycare center is closed. The first 2 weeks you can do without pay. The next 10 weeks you get 2/3 of your pay, up to $200. There are exceptions. If you are under 50 employees, you have to apply for it. And the Department of Labor said, don't send us anything now. Just start to document why, because you're going to have to prove why you cannot comply with the family leave requirement or the sick leave requirement. The act applies if you lay off any employees for those 5 reasons, excuse me, for the reasons, that's just true for both the sick leave and the family leave. If for the 5 reasons for sick leave and the single childcare reason, if you've laid them off after March 31. If you have 25 or more employees, you have to allow them to return to their prior positions. Next slide, Louis. You get a tax credit of 100% of the sick and family leave paid. The way you do that, you retain the owed family payroll tax up to the amount of leave. That's the 6.2%. That's obviously, if you have everybody laid off, not going to cover it. So that if that leaves you an insufficient amount, you get an expedited payment. And the IRS under the new law has also allowed you to have advance payments, but they have not told us how to apply for them yet. That should be out in the next week or so. The next act is the CARES Act, and it has 3 main provisions for small businesses. It's a forgivable small business payroll protection loan. There's an employee retention tax credit, and there's an emergency small business loans and grants. Let me go through each one. Louis? The small business payroll protection loan, you have to certify that you're going to pay for the payroll or business expenses. And they're identified what is payroll and what is business expenses. The amount of the loan is 2 times the prior 12 months payroll expenses, okay? The problem is many people say what is payroll expenses or is required articulate in the law, but they don't include rents and mortgages and utilities. However, this is where the confusion comes in. You can use the payroll loan for business expenses such as rents, etc. You get to apply for these loans and use them. It covers for basically 8 weeks or 4 months of expenses. You get to the end of that time, you get to get potentially all of it forgiven, depending on the number of employees you've retained. And so everybody knows independent contractors, self-employed, and sole proprietors are also eligible to get these loans. They're going to be based more on 1099s and tax return submissions than they are going to be on your average payroll. Next slide. The next one is the Employer Retention Tax Act. You cannot apply for a payroll loan and get this tax credit. It's for people who did not apply for the payroll loan. It's 50%. If you have a loss of 50% of your gross receipts, then you're eligible for this. The tax credit is 50% of what you pay to all employees if you're under 100 employees. If you're over, it's only 50% of what you pay to employees that are on leave and you're not paying them. The right to do this tax credit stops when the receipts you receive that are greater than 80% of your prior year's receipts or at the end of the year. Next slide. This is very important. It's one of the things that are often overlooked by people. There are emergency small business loans and grants. You can apply for a small business loan. The requirements are lower. There's no fees. The estimates are gone. The personal guarantees and collateral are gone. You basically just have to submit a credit report and you can apply for the loan. It's on a first come, first served basis. There is an immediate $10,000 grant that will be paid within 3 days upon applying for the loan. That is forgiven if you don't get this emergency loan. If you do get the emergency loan and you also have a payroll loan, however, that $10,000 will be considered as part of what that payroll loan has been forgiven. So in other words, you get a payroll loan for $100,000 plus this $10,000. They will forgive, and they forgive the whole $100,000. They actually forgive. They'll consider you to have a loan of 110 and they're only going to forgive the 100, okay? You can get both this loan and the payroll loan if they're used for different obligations. And again, independent contractors, self-employed, sole proprietors can get these loans. Next slide, please. Lastly is shelter-in-place laws. These are very confusing to most people. There is an essential business exception in every one of them. The problem is the orders vary by state and locale. If you're in Massachusetts, you have an order, but if you're in Boston, that order has been superseded in some ways and is more restrictive. Construction and building supplies are often included as exempt or essential businesses. Some include all constructions, like New Hampshire. Others allow only emergency repairs. My recommendation is if you're going to operate under these exceptions and you're in a shelter-in-place state or locale, give a little card to your employees and your subs that simply say, they're operating as an essential business under the construction exception, and that way they're not stopped or given harassment or anything. Next slide. With that, we can close the slideshow and start with questions and answers here.
I've got a couple, Jeff, that have already come to me while people are paying attention here. The first came from Vinny Verga. He said, if you furloughed or laid off your employees, does the Family First Act still apply to you while laid off?
It depends. Louis, you can close the slideshow if you want. It depends on when you laid them off. If you laid them off before today, then the act does not apply. So you have no obligation to pay them. If, however, you rehire them and the act is still in effect, which could be through the end of the year, and they then subsequently go out on leave or are laid off because of one of the 5 reasons, then you have to pay that sick pay. So the question is, if you laid anybody off for any reason, even if they're one of the 5 reasons prior to today, then you have no obligation to pay that leave or any of the, whether it's family leave or whether it's sick leave. But if you bring them back on, it's considered rehiring them in a sense, then that obligation is back in place if you subsequently end up laying them off for one of those reasons. I hope that's clear, because this is, if you wanted to rename these laws, they'd be called Let's Keep Accountants and Lawyers Fully Employed, because these are extremely complicated and convoluted.
Hey, Jeff, one of the questions we've gotten consistently, and Don Roberts brought this up, and he's listed it again here, is can we include subcontract installers? Can payments to 1099 installers be included in the payroll for the purpose of determining the loan amount?
Yes, you can include independent contractors, temporary workers, day workers, any of that you can include in the amount when you calculate it. The only issue is they're not accounted as the number of employees when you determine how much you get the loan paid back. And this is basically what they'll do is they'll look at the total number of employees you have. Say you have 10 employees, but you retain only half of them. So you retain 5 of them. You've paid 5 of them during this time period. You'll only get 50% of the loan back, be forgiven. if it's used for the purposes that are allowed.
Jeff, another question that came in. Will you please further explain the 2.5 times the 12-month previous payroll? This particular person understood that the 2.5 times, it was 2.5 times the average monthly payroll from the previous 12-month period.
That's right. That's probably my trying to be too cute, a little too shorthanded here. It is actually the 12 months prior to the giving of the loan is your average payroll. Unless you're seasonal employees, such as agricultural people, there is an argument that you folks have some seasonal aspects, but I don't think you'd be considered a seasonal employer. So yes, it would be the average monthly payroll times 2.5 times, and that would be equal to the amount of the loan that's available to you. And it's the average of the prior 10 months prior to the loan. By the way, unless you weren't in business for the prior 20 months, and then there's a different period you can use.
Okay. And again, guys, I'll reiterate that many of the answers you're getting are already available on the website, WFCA.org, under the frequently asked questions, but this gives us a chance to get a little more in depth from Jeff. And Jeff, I'm going to try to continue along that line. Somebody had asked the question, what if I do not have the cash flow to pay the leave?
There's no relief on whether you have the cash flow to pay the leave or not. The question is, it's not going to be enforced. They said for the first 30 days. We took that initially to mean 30 days after it was enacted, which is today. It's effective date. Department of Labor said it's the day it was enacted. So you only have to, I believe, April 17th or 19th. I can't remember the exact date. There'll be no enforcement of it. If you can't pay it, you can't pay it. You're going to look for an exception to it. So are some indications they're not going to give any relief for anyone who, for the reasons other than the family relief aspect to it. So if you're under a quarantine order, if you're you're sick, or the doctor's told your employer, the worker's sick, or the doctor's order, you may still have to pay that. The answer is you can't get money that you can't pay. I mean, there's nothing you can do. You have to make a good faith effort to comply. That's all that's required.
Jeff, just a little clarity. Don Roberts said he checked with his accountant last night on the ability to use the subcontractors in your calculation, and his accountant said no, because they could double dip, as they also have the ability to apply themselves.
It's different. You can use in determining your payroll costs, you can use your independent contractors and subcontractors. That's just determine the amount that's going to have the 2.5 times applied to it. But doesn't require you to pay them. And in fact, when they determine what portion of the loan is refundable, they're going to look at your actual employees only. And so the answer is they can get loans as well to ensure that they get their money during this time frame. And you do not have to pay them, but when you calculate how much your payroll costs are, it's included. So it's not a double dip. Potentially it could be, but it's not meant to be. And one of the things that's going to happen is when you certify that you want this payroll loan, you have to certify what you're going to use it for, and it has to be for one of the acceptable reasons, and the primary reason is paying payroll.
Jeff, I'm going to stay on that line for just a moment. Can owner's pay also be factored into payroll?
Well, if they're an employee, they can. You can't be a silent owner who has an investment only and be considered an employee. I do not think it's going to be interpreted to include them. But most small businesses, the owner themselves are all employees as well. There is a limit on how much of that their pay can be included, and it's capped at $100,000.
Okay. Another question that came in, do you consider a stay-at-home order a quarantine event? I guess that's more along the lines of insurance, I would imagine that question is, but how would you respond to that?
It's twofold. One, is it a quarantine order that qualifies for the paid leave? And secondly, is it a quarantine order that may allow you to pursue business interruption insurance? Whether it's a quarantine order depends on what it covers. So if you're in Vermont and you can still do all the construction, if you're in Nevada, construction is considered an essential business and it's all exempt, then you're arguably not under a quarantine order.
And Jeff, you may have answered this in some degree, but it's a very simple question. How do I get an exemption?
The answer is we're supposed to know within the next week how to apply for an exemption. They're going to require documentation proving that you cannot pay this money. And so that's going to be requiring bank statements, cash flow issues, things of that nature. They may even require you to look at your line of credits. They're going to look at all those things for you. My recommendation is you document everything that's going on, why you can't pay payroll right now, why you can't afford to pay these leave mandates. If you can't do it, you can't do it. I mean, they're not designed to put you in bankruptcy. They're designed to ensure employees get paid during this crisis. And ultimately, you can back pay them with loans, the payroll loan or emergency disaster loan.
Okay, so I'm going to move to loans, Jeff, and we may come back to some of these other categories. But in relation to SBA loans, 3 quick questions I think you can answer with one response. Should I apply? How do I apply if I should? And will all SBA loans be forgiven?
The answer is yes. That's complicated, and no. But the answer is yeah. You have to do your own circumstances whether you should apply for a loan. The payroll loans may provide you with truly a cash flow for in the beginning to pay some debts that will, portions of it, if not all of it, can be forgiven. It's basically a grant if you use it all for payroll, or you retain all your people for payroll and you use the money for the accepted purposes. You may have, that may be a pure grant. It's going to be forgiven at the end. So the answers would be, unless you are still very, very busy, and that could be some commercial deals. As Steve mentioned, there may be still substantial commercial construction going on between hospitals, hotels, affordable housing projects. There may be substantial amount of commercial work going on. It may be cheaper and better to be able to deduct 50% of your actual payroll costs as a tax credit, not deduction. It's a tax credit. So half of that payroll could end up be considered your taxes. That's a pretty substantial amount. So you're going to have to make that evaluation. How you apply, small business are going to be completely overwhelmed, the administration, with this. Go to your bank as well. So I would immediately call my bank, talk to them about these payroll loans, and talk to them about an emergency loan. If you have an emergency loan that's not going to be used for these basic expenses, such as your payroll, your rent, etc., but you have other expenses you need to be able to pay that will not be included in it. They can be everything from car rentals to you just purchased or built out new buildings and you have debts to pay off on those. All of those may be able to be included in an emergency loan. What you can't do is double up. You can't get a payroll loan for payroll and then get an emergency disaster loan for payroll.
Okay, Jeff, we've had a lot of questions about payroll, and you talked a little bit about what is included in payroll expense. Deb DeGraff, the chair of our WFCA board and executive committee, asked this question. For those employees that make more than $100,000, do you use $100,000 as the cap in your calculation for payroll cost, or can you not count them at all?
I'm going to give you the world's best lawyer answer. Maybe, because the law is not particularly clear. It's the way it's worded. You can interpret it to say any employee who makes more than $100,000 is excluded. I think a more reasonable interpretation is anybody who makes more than $100,000 is capped at that amount. So I think you should be able to include employees that make over $100,000, including yourself if you're an employee, but you're not going to be able to claim more than $100,000 when you calculate that loan amount. But we've asked the Department of Labor to clarify that, and we're waiting for answers on that. We've not gotten clean answers yet.
Okay. And Tyler, Tyler Weaver had left a question that I think was similar to that. Tyler, if we did not answer your question in response to Deb's question, please further explain yours to me, because I'm not really sure how to give that one to Jeff. Jeff, moving along, Can I get a payroll loan if I already applied for an SBA emergency loan?
Yes, you can, but that was a big, we pushed for this really hard because many of our members went immediately for an emergency disaster loan. And they all of a sudden, the original law that came out, the CARES Act that came out, wouldn't allow you. If you applied for one, you couldn't apply for the other. You're now allowed to apply for it, provided you applied for it after March 1st of this year, and it will be rolled into the payroll loan, the payroll protection loan. So if you have applied for $100,000 for an emergency loan and your payroll loan is $200,000, you're not going to get $300,000. You're going to get the payroll loan only, but they're going to be rolled in together.
And Jeff, for the payroll loan protection forgiveness, do all small businesses qualify, or will there be exclusions for companies who are considered essential or for any other reason?
No, it's all businesses can apply, all small businesses. It's this has always been true for the flooring retail industry. It's anybody under 500 employees, but the law makes that quite clear for everybody. So contractors, everybody under 500 is considered a small business here. Everybody can apply for it. It is a formula based on payroll cost. There are things that are included in it, things that are excluded in it. And the law is quite clear what those are. Once you add those all up, multiply it on the average monthly amount for the prior 12 months, you multiply it by 2.5, and that's the amount you are eligible for.
All right, good. Guys, if you're doing the Q&A screen with me, some of your questions are being answered by other people as we go through, and I see nothing in those responses as contrary to what I've read from Jeff, so I'm not going back over those. What's the immediate $10,000 loan? Can you explain that one in a little more detail?
You can apply for an emergency disaster loan. Those have been around for a long time. What they've done is they've changed the rules on the emergency disaster loan. They've made it much easier to get. Used to be, there was a lot of collateral and guarantees had to be given, personal guarantees. Those are all gone. One of the big issues, you had to prove that you could not get the loan from somewhere else. That is gone. So it's much easier to get. If you apply for it and ask, you get an immediate, within 3 days, $10,000. If your emergency disaster loan is not granted, that $10,000 is yours to keep with no payment back obligation. If it is granted, then it's rolled into the loan that you asked for.
Okay. I'm switching back and forth between the chat screen and the Q&A screen because we've got some questions on both. Is a rent payment and a mortgage payment considered in the same way?
A rent payment is absolutely allowed to be used. A mortgage payment, only the interest can be, the payroll loan can be used for the interest, not for the principal. The idea is you can't use the loan to pay down your principal on a mortgage because it's a very favorable loan. Maxes out at 4% for over 10 years, can be up to 10 years. So if you don't have it all forgiven. So the idea is you can only use it for interest, and not just on mortgages, but on other business debts that you have. You can use it just for the interest on it. Now, the practical aspect is you don't pay the interest on your mortgage generally separately than you pay the principal. It's all kind of tied in. So when you go back to get it forgiven, you're going to have to look at the fact that you better have some cash flow that pays that principal part. Don't use that loan up all on your mortgage payments because you're going to end up paying principal as well, and that's going to be a problem. I don't think these are going to be heavily enforced.
Okay. Jeff, what is a proper period of compared time for an employee on staff for PPP? Gary says that the time frame has been given for 12 months in the previous year. However, they've seen dates that can be elected of the first 2 months of the year. Last year, we were moving locations and had a lot of part-time help, he says. And let me go down here. And we would prefer to compare payroll against the beginning of this year. Can we elect the time frame as opposed to the 12-month average for 2019 that has been mandated?
The answer is kind of yes. I don't mean to make it sound silly, but if you're I don't have this on the tip of my tongue. I'm trying to remember the exact dates on it. if you're a seasonal employer, excuse me, then you use 12 weeks, and starting from February 1, 2019 to the current, or March 1st, 2019. So those are the periods you can use if you're seasonal, if you're a seasonal employer. So in other words, you hire people on and off. You have an option of either using 12 months, or you can use the 12 weeks starting either February 1st or March 1st of 2019, not this year.
Okay. Another question here from Deb. So if we pay our people their standard pay, no matter how much they're working or not, versus the $511 or 2/3 calculation under the FMLA, is that still considered payroll calculation to be granted back?
No. Well, I'm not quite sure I understand Deb's question. Let me give you an answer. I think what she's asking here is, if you pay the sick pay and leave pay, you get a tax credit for that. That is 100% of those costs, which is collected by you keeping your payroll taxes, and the difference, you're getting a very quick payment of that from the IRS. Since you've already been given that money back, when you look at the payroll loans and what you needed them, those have to be deducted because you're not actually paying them.
Okay. So Deb, if that didn't
look at the forgiveness, they don't that portion of it. When you look how many employees you paid and for what period of time you paid, those portions are not included.
Okay. So Deb, if we didn't interpret that question right, just reword that and send it back to me. Patty asked, what documents will be required to prove payroll amounts for the payroll protection loan?
I think in all honesty, this is so overwhelming. They're simply going to look at probably your tax returns. It would be one thing. You can probably provide, if you have a payroll company, provide it. The reality is, remember, the payroll costs include things that may not show up in certain ways. They involve salaries, wages, commissions. They involve vacation, parental leave. They involve retirement benefits. They include state and local taxes. They do not include, however, federal taxes or sick pay under the Family First Act, or leave paid under it. So you're going to have to actually calculate them out, but they're probably going to simply accept your payroll documents. You just recall, it's a crime to lie to the government. It's a felony. If you don't believe that, look at all of the recent Mueller investigation convictions. Look at during the Contra affair litigation. Ollie North went to prison not for anything he did, because he lied about what he did. So they anticipate you're going to be honest about this. It's too overwhelming for them to do this like a normal loan program. This is going to be done extremely quickly, and based probably upon your good faith. Act in good faith. Don't run the risk.
Jeff, I think you answered this already, but is the 12-month payroll for 2019 only, or 12 months from March 2020 to March 2019?
It's from the date the loan is given, technically. Okay. Now, obviously, that's the way the law is written. Obviously, you can't figure out the date that the loan is given, because you don't know when the loan is going to be given. So you're going to probably do it from the date you apply for the loan. It, however, allows you to go back and pay back to February 1st. That's, yeah, and as I said, this law is not written to be easily interpreted. So in other words, I can use that, I can get the loan, say I get the loan on April 15th. I can use that 8 weeks of coverage, and I can go back to February 15th to pay for it. So I can actually use the 2 months to proactively go back, unless it is for something under the Family First Act. Okay. So that's why it's complicated, and it's not clearly written. It was written quite quickly, so there are going to be a lot of things in here that are going to end up being slightly modified.
Yeah, and Jeff, I know we spent a lot of time on payroll. I've got a couple other sections I want to make sure I get to. I do have one more question here. Is a performance bonus, and I remember seeing this as the reason I'm asking this question, is a performance bonus included in the PPP loan when calculating payroll?
No.
Okay.
Overtime is, but performance, it appears they're not. They're not specifically excluded. They say salaries, wages, commissions, or other compensation.
Yeah, I remember
The question is whether other compensation includes it. There's some indication labor does not consider bonuses as that way. The answer is that until you get a clear answer, if that allows you to get extra loan, I would push it in and they can take it out. And if that's a confusion, it's not a lie, it's just a confusion. And it may end up reducing how much you get forgiven, but at least you got the money ahead of time.
Okay, here's somebody asking for the forgiveness aspect of the payroll protection loan. I read as payroll from 4/1 to 6/29 is not calculated to determine the amount that will be forgiven, but rather the employment level and total payroll as of 6/30 and the following 8 weeks. Can you confirm that?
Yeah, the loan covers a 4-week period. It's 8 weeks, an 8-week period. Once you get the loan, the forgiveness aspect looks at that 8 weeks up to June 30th. So whenever you use the loan within that time, that's what you can look at. What they're going to do is say, you got the loan, just using these example, on 10 people, but you paid, because you had to pay your rent and your mortgage, you ended up only paying 5 of those people to continue to work. Okay? Well, you're only going to get 50% of the loan back because you only kept 5 people being paid on payroll during this time, during the 8 weeks in which the loan was being utilized. Compared to the 10 people you'd used to get the loan.
Yeah, this ties in somewhat with that, Jeff, and this is a great question from Robert. I have 25 installation employees. I should be able to keep approximately half of them busy during this time, and I will have to furlough the rest. How is the government going to designate which employees I am paying who are technically earning me money versus which ones I'm just paying while they are at home?
They won't. But if you paid all 25, you got a payroll loan, you paid all 25 of them, then that loan is totally forgiven.
Okay. And Jeff, here's one, says, as an employer and an employee, can I apply for both unemployment coverage as well as SBA loans and grants?
There are certain rules on the unemployment insurance. The answer is that I'd have to go back and look at this. I'm not certain, but there may be a restriction of you applying for unemployment insurance and applying for the loan. And the reason is that there's a bit of mutual exclusivity to it. You can't get both. You can't be paid and get unemployment. So if you go for unemployment insurance, I guess you get the loan to pay your mortgages, your rents, utilities, etc. But none of it will ever be forgiven then.
Okay. Here's another good question from Vinny. What if you have a business that opened in November of last year? Can you still apply for either or both the EDL or the PPP?
Yes, you can. The difference is that you're going to use a different time period in order to interpret what the loan is. And you're going to look at, I believe it's 12 weeks prior to the loan application. I have to go back and look at this. These are kind of the super technical aspects to it. I believe that it may go back to January of this year. You get to look from January forward if you're a new employee. But I'd have to go back and check that specifically. I don't recall it off the top of my head. It's easily verified, but if you haven't been in business for a full year, then you don't have a full year's average, and they allow you to use a different time frame to calculate it.
Okay, and Jeff, from fellow board member Tim Jacoby, he asked, how and where do we apply for the SBA loans? I'll give that a stab first. I know we're working with different organizations, even through our lobbying firm, to make that process very easy for you. We hope to create a link that allows you to simply click on the link to make that application. Just know that we're working diligently on that. We do not have a solution yet, but there are multiple places that you can go. Jeff, I'll let you take it from there and speak to the depth of that.
The loans are administered by the Small Business Administration, and they're going to be overwhelmed. There's no doubt about it. They're not equipped to deal with this at this stage. They're neither staffed for it nor are used to this process. Banks also can give these loans out based upon the CARES Act expansion of what banks are qualified to do it. There's some advantages for larger banks starting to do this that were not available before. That's why many large banks did not do this. So the question becomes, where do I apply? I would start with my local bank. You can also call the local small business administration to see what they can do. I would probably try both avenues immediately, especially if you're going for the emergency disaster loan, because that is a first come, first served loan.
Hey guys, a couple of you have been asking, will this information be available to you? Yes, it will. We are recording this conversation we're having with you, and we will make that available on our website, WFCA.org, so you'll be able to access this and reference back to these responses that you're getting from Jeff. Jeff, explain briefly, if you can, the shelter-in-place orders.
The shelter-in-place orders vary by state to state and locale to locale. You have to read your order, what is allowed and what's not. Again, some of the orders allow all construction. Some reference the federal standard, which allows the maintenance of essential facilities, including residence, meaning homes, obviously. What that means is quite unclear. Does that mean you can continue to construct homes? In some states, that's going to be allowed, depending on the interpretation. In some places, it's probably talking about just repairs or completion of jobs that could create health or safety hazards. I cannot tell you until I look at every one of them what that means. I do know, for example, one of the states, I believe it's Wisconsin, says they can't be done just for a decorative or aesthetic value. They have to be done for, the construction has to be done for essential value, such as repairs for safety and health. Other states have allowed all employment to go forward. All construction to go forward. So it depends on your rule. I know in California, business supply people, carpenters are exempt, but some counties have said that only means to complete a job or because of an emergency.
Yeah, or safety purposes to make sure.
An emergency generally would be safety or health purpose. I mean, if you have somebody calls up, they've had a flood, the plumber's coming, he's an emergency person, and everything is molding up and they need this carpet pulled out, something put in, that probably is a safety issue that you could probably go forward with on the most restrictive of these statutes.
Jeff, I'm going to try to get to a couple more questions they have here, but one question I know we got fairly consistently was, do I apply for insurance even though this is a pandemic and I might not have had pandemic insurance?
The answer is almost all of you have general liability insurance, which usually includes a business interruption policy. My high recommendation is you apply for insurance. No matter what your agent or insurance company says, apply for it now. I think that's the best advice because most of the time they're going to deny it. One, they're going to sit there and say it only covers physical damage to your facility or the facilities around you. Obviously, an infection is arguably a damage to your facility, particularly if you've had somebody who've had COVID-19 symptoms in your facility, and that creates a problem, but it doesn't matter. There's also, many of them cover government shutdowns, many or orders that affect your business, and some specifically exclude pandemics. This is going to be litigated. There's already multiple lawsuits going on. Some states are looking at mandating that you provide, that they must pay business interruption insurance, whatever the policy says, under these circumstances. And those are going to be challenged in court. This is going to be years in the making. But if there's money waiting for you, you might as well put your name into the pool Some will make you actually find coverage. Those that you don't may find later on you're going to get a lot of coverage back for a lot of this lost business. And so get it on file because there's a time limit on when you can file.
So Jeff, if you have coverage in the company insurance policy for business interruption, can you use it and still utilize the payroll loan and it be forgiven?
Yes, if you use the loan for payroll. Again, business interruption insurance covers more than just your costs. It covers lost profits, etc. So yes, you can.
Okay, I'm going to try to hit a few more. We're past the hour, guys. I'm going to try to hit a few more very quickly, and then we'll have to wrap this up. We do have another call at 2 o'clock this afternoon. We'll cover a lot of the same content, but might get to some of these other questions. This one's kind of unique, so I'll lay it out to you, Jeff, and I don't know that we'll be able to answer it, but a special case, one of this person's employees was sent to part-time for January and February while business was slow in the winter. In March, he was supposed to go back to full-time. Can I still hire him back to full-time and have the loan forgiven?
The answer is they're going to look at the average number of employees you have, okay? When they look at that, they include, when they look at whether you have 500 employees, they include part-time employees in that number. So my answer is yes, you probably can bring them back. You can probably calculate what his average salary was for that prior 12 months, remember. It's not only the average number of employees you've had during that time period, but it's the average payroll cost you had, which would include that person's salary, which in some months would be greater than others. Okay. Once that number is done, if you use that to pay this individual, even if it's full-time pay, to the extent that you keep the same number of employees and you use it for the purposes the loan is designed for, payroll, rent, utilities, etc., then 100% will be forgiven.
Okay. In our business, it says we have a book of 4 to 5 weeks of committed work from our customers. We won't know our loss of sales income until that work has been completed and billed. How do I know whether to file for a disaster loan or relief? Explanation: if I file, I have no documentation of a loss of sales.
Well, the question is a little more complicated. It depends on why you think you're not going to complete that business. If you're under a quarantine order that doesn't allow you to complete the business, that's true. If there's a supply interruption caused by corona, that's also a proof that you're losing the business. If you're allowed to complete the business, then that's not a loss, obviously. There are delays that can cause also delays that are here. So you need to, I need to greater information on that. But to the extent that you have a business in place that you think you'll complete, then obviously the emergency loan may be affected by that, but the payroll loan is not. If you're still paying people, they don't care whether they're working or not. They just want to make sure everybody's paid. All you have to do is verify that you've been affected by COVID-19 pandemic, your business has been, and that you're going to use the loan to pay employees or these other business expenses that are acceptable.
All right, Jeff, this one says, I've read that they're going to forgive up to 8 weeks of payroll, providing you continue to pay employees. Is that a fluid amount of time? Why then can you apply for a loan for a full year of payroll?
You can't apply. You can apply for a loan for a full year of payroll under the emergency disaster loan. But if you apply for the payroll protection loans, those will only cover 8 weeks. So that's why the 2.5. So basically 2 months. That's basic. That's why the 2.5 times your average prior 12 months payroll is used to calculate it. So to the extent that you use that loan to pay and kept the same amount of employees or paid them, you don't have to keep them employed. You have to just keep paying them. That whole loan will be forgiven. But after that, you're not required to pay them, and you're not required to. But you also get no more loan for that. If you intend to keep them on and pay them part-time, you can apply for an emergency loan for the subsequent period that you intend to pay them. But be very clear that's what you're doing.
This question says, if we apply today and they're paying for an 8-week period with PPP and work doesn't come back, can I put employees on unemployment after the 8-week period? it's 13 weeks or so until July 30th. Do they have provision to protect us financially for the additional 5 weeks?
The answer is that you're obligated. It depends on when you get the loan. I mean, you obviously don't have to use this loan to pay employees. You get to pay it. You actually get to pay them back pay all the way up to February 15th if you've laid them off and they've not been paid. So you actually can take the loan. So you get it on April 15th. You can take all of it and pay your employees with it that you have not paid since February 15th. That covers your 8 weeks. After that, you can apply for your refund or your forgiveness and with that documentation showing how you used it. After that 8 weeks, they can apply for unemployment insurance. And as you know, the amount's been increased and there's no wait period, et cetera, et cetera.
Jeff, a question from Mark Weaver. If we include our installers for the payroll loan and due to the lack of businesses, we only pay them half as much during the period through June, will the loan still be forgiven?
Yeah, actually the odd aspect of this is that you have to use the loan for the purposes that are allowed. So it's payroll, rents, mortgage interest, business loan interest, utilities. And utilities are fairly broadly defined. Could include internet services, for example. If you use the loan for those purposes and you kept the same number of employees, this is not, did you pay them the same? It's purely the number of employees you have. If you kept them the same, no matter what you paid them, then yes, you get the forgiveness. That's an odd aspect to this.
Okay. And again, for those of you who are asking, I've got several questions here about seeing this again. It will be posted on www.wfca.org. That's how you can go back and view it at a later time. Likewise, we'll be recording the one that we do this afternoon.
Scott?
Yes.
Can I just add a few little comments to you? There are also some state loan programs and grants out there that have been recently enacted. You need to check your state. Michigan, I know, has one. I've not checked them all. Number two, many of you have lines of credit. Those lines of credit require you to advise the lender of any dramatic changes in your business. You probably want to talk to your bank just to make sure you don't find yourself in violation of those. Also, there are anybody over 50 employees have a WARN Act requirement, which is that you have to give, if you're going to close down your business, and you're over 50 employees, essentially close down, you have to give a certain notices and there's certain obligations arise. If you're under 50, there are some state WARN Acts. So just be aware of these acts so that you don't end up inadvertently violating these local and state and federal rules. Finally, many of you are going to have to look at your contracts. I just want to warn you that if you have people complaining about incompletion, you're arguing with them, there are doctrines that allow you to move forward. There's a force majeure clause, which you've all heard about. Does it cover this? It may. I have to look at the force majeure thing, but force majeure requires notice. So if you want to claim I can't complete a contract, you better give the notice. There's also a thing called the doctrine of impossibility, which may apply even if you don't have a force majeure or it's not applicable. And there's a doctrine of illegality, where you're not required to break the law. So if you can't go out and complete a project because of a quarantine order without violating law, you don't have to complete the contract. So I just want you to be aware of it. And that applies to your suppliers as well. So I just want you to be aware of all these little kinds of things that you're probably not thinking of. We've advised you on credit card and clearinghouse fraud as well. That's important. Be diligent that you don't get caught in this time because you're not in your offices as much or at all. So please be aware of all those ideas, as well as these opportunities to find financial help.
Yeah, all of those things are available. Again, those resources are available to you on the website, www.wfca.org. Guys, I had to cut it there. Some of you, there are a few questions we didn't get answered. I promise you I'll get these to Jeff. We'll do our best to answer them and put them in our FAQs as quickly as possible. We do have another webinar at 2 o'clock today. We may try to work those questions into that portion so that we can get an answer there if you want to tune in to that one as well. Please ask others to join the WFCA. Again, we want our voice to be as loud as possible in DC. The membership is free, so it should be a pretty easy ask, but we're just trying to speak for the industry as a whole when we address these issues or when we try to impact legislation, and we really need you in doing that. First and foremost, everybody, please stay safe, take care of yourself, listen to state and federal guidelines to self-isolate, self-quarantine, stay away from people. And I know it's difficult to get your children to do that because I've got 4 in my house. You've got to do it. The longer we don't obey these guidelines, the longer this drags out. We're hurting. All of us are hurting the same. We're all in this together, but we will get through it together. We'll be stronger for it, but we've got to do it together. Thanks for joining us. And again, if you want to join us at 2 o'clock, we'd love to see you then. God bless.